Hey, it's Siobhan Murphy here, CPA and founder of Thrive Business Group. I am creating a short video here to answer the question, what is the deal with estimated tax payments? We get this question a lot, particularly from folks with self-employment income, especially early on in having a new business. So what is the deal with estimated tax payments? Here's how they work. If you file a tax return and you owe more than $1,000 on that tax return, the IRS requires you to make estimated tax payments. Now, this can happen a couple of different ways. It may be that you didn't have enough withholding from your paycheck at your job, or it may be that you have other sources of income that don't have withholding, like investment income or rental income or a small business. So when you file a tax return, you owe more than $1,000 on that tax return, you have to pay it by April 15th. But the IRS also says, you know what? I don't want to wait until April next year to get paid when it's more than $1,000. So that triggers the requirement to make estimated tax payments. Now, these are payments that you make to the IRS quarterly in advance for the following year. So if it's like right now, it's March 2021, we're filing tax returns for 2020. If there's a balance due of $1,000 or more, that will trigger a requirement for making quarterly estimated tax payments in 2021, so that you are prepaying your taxes for 2021. Now, the amount of that estimated tax payment is based on the prior year tax return, on 2020's tax return in this example. So what that means is if you make more money in 2021, you will be making estimated tax payments based on the prior year, which will keep you out of trouble with the IRS, but it may still not be enough tax. You may still have a balance due on your 2021 tax return if you made more money without withholding on it. The reverse is true as well. If you make less money the year after, your estimated tax payments are based on the prior year. And if you make less money in the following year, then you will be overpaying and you should have a refund on your tax return. So estimated tax payments are not designed to be the exact amount that you owe. They're designed to keep you out of trouble with the IRS, to pay in at least as much as you paid in the prior year, so they don't have to wait a year to collect from you. So hopefully that helps to explain a bit. When you complete a tax return using a self-preparation software like TurboTax or H&R Block Online or anything like that, if you have an estimated tax payment requirement, that program will spit out coupons for you and tell you how much to pay. The same thing is true for us. When we prepare a tax return for you, if you have an estimated tax payment requirement for the next year, we will provide payment coupons for you, the amount due, and instructions on how to make those payments, either by mailing checks or making payments online. We also provide the due dates with that information. Now as well, because we are a CPA firm, if you do have a lot of variation in your income and the amount of tax you need to be paying in, we also provide tax planning services. It's a consultation service where we can help you estimate the correct amount to be paying in to be covering your taxes rather than just keeping you out of trouble with the IRS. So hopefully that helps to shed a little bit of light on what the heck are estimated tax payments.